Today we'll be looking at how the 2024 presidential election could impact your LLC. As a registered CPA and owner of a tax technology company, I've seen how policy changes can catch many businesses off guard, often leading to missed opportunities or unexpected challenges. That's exactly why we're making this video today, to break down how the potential Harris versus Trump election could impact your LLC, especially if you're just starting out. We'll explore the key policy differences, potential tax changes, and regulatory shifts that could directly affect your business operations and bottom line. Understanding these potential impacts now could save you headaches and even help position your LLC for success regardless of the election outcome. So let's dive right into it and uncover what every LLC owner needs to know about this critical upcoming election. Now, the first thing I want to get off the board is this is not meant to take sides or do anything else. What we're doing is taking information that both campaigns have put out there publicly and just giving that information to you. So don't look at this at any point of a way as siding with one particular candidate or not. And I will also note that we have asked both parties to come onto our YouTube channel, onto our podcast, to give their side of the story, and we haven't heard anything back. And the other thing I want to talk about is, before we dive into it, is that this is just campaign plans. These things will change, because when we talk about major impact tax bills, it takes Congress, it takes the full government to help make those impacts. So while a candidate might say one thing, that doesn't necessarily mean that that will actually come true. That what they say might be a little variation of it, of what actually comes through, or it might be exactly the same, or it might not come true at all. And so what we're talking about is just what has been proposed, but just know that a lot of these different things could change dramatically. So the first topic that we want to talk about is the corporate tax rates. And this would be for C corporations. So we're not talking about S corporations or flow-through entities, LLCs, things like that. This is specifically for C corporations. And currently, the corporate tax rate is at 21%. That's after the Tax Cuts and Jobs Act. That was one of the pieces that was part of that. The Harris campaign talks about increasing that 21% up to 28%. And the Trump campaign is talking about lowering that corporate tax rate to 20% or even 15% for companies that make products within the U.S. So those that are not, making products overseas. So that's how, when we talk about corporate tax rates, this is for a C corporation. Currently, it's at 21%. That's the corporate C corp tax rate. Harris is talking about increasing that to 28%. Trump is talking about lowering that to 20%. And while we don't see a lot of business owners, at least in the small business owner community, going down that C corp route, depending on where this rate goes, it could change the way we do planning. We might say, okay, the S corp, LLC, S corp route might not be the best option depending on where this rate comes in and how that changes. So when this rate is high, we're definitely not looking at a C corporation because it involves double taxation. Now, if you're a large business, different things like that, we might go down a different route. But as this rate starts to decrease, we might look at different planning opportunities, or how can we combo your LLC with C corporation, different planning opportunities around that. So just keep an eye on this. Again, this is the corporate tax rates. Now, I just want to also mention that we can only break down how everything goes in both campaigns in a small amount of detail here because we only have a short amount of time. But if you have any questions on this or anything else related to small business owners saving taxes, click the link in the description to get access to unlimited tax questions, unlimited access to our team of tax experts, where we can guide you through this or any other tax question, tax strategy that you might have. Now let's talk about some business-related items when it comes to this campaign. And we're going to talk about the Harris campaign first. The Harris campaign has talked about limiting some interest and depreciation for large property investors. So if you're a property investor, you're investing in real estate, rental properties, things like that, the Harris campaign, and you're doing that through an LLC, there might be some limit on the interest or depreciation that you can take for some of those properties. That's just been part of the proposal. The other thing that the Harris campaign has talked about was increasing the startup cost deduction from $5,000 to $50,000. And this could be a really great benefit. Now, currently, you still get those startup cost deductions over $5,000. It's just that first year is sometimes limited to a lower dollar amount, and then you amortize anything over that over the course of 15 years. The Harris campaign is talking about just allowing up to $50,000 in that first year in startup costs. Now, when it comes to Trump on business-related items, one of the things that he's talking about is imposing a tariff on U.S. imports of 10 to 20%. And if it's an import from China, it would be a tariff of up to 60%. Again, these are some of the things that they're talking about now. And so this is important. If you get goods from from outside the U.S., this is a topic that you want to be thinking about. How does that impact your business? Where can we plan based on the outcome, based on whoever gets elected? How can we look at these things and plan accordingly? The next thing we want to talk about is capital gains. And this comes into fact when you sell and appreciate assets. So if you have an LLC and you're looking to sell that LLC, or you have an LLC and you have assets within it you're looking to sell, or you have rental properties, this is where that can come into play. And the Harris campaign is looking to increase the top rate on long-term capital gains to 28% for taxable income over $1 million. So if you're making over $1 million a year and you have long-term capital gains, the Harris campaign is talking about moving that long-term capital gain rate to 28%. Currently, that long-term capital gain rate is at 0%, 15%, or 20%, depending on your income. And if you were in that $1 million range, you'd be at that 20% rate. And so now her campaign is discussing moving that to a 28%. The Harris campaign is also talking about increasing the net investment income tax. So they often call this the NIT tax, or the NIIT, where the net investment income tax, this is if you're investing in, you have interest income or dividend income, or you're investing in the stock market, this is where this starts to kick in. And Harris campaign has talked about increasing that net investment income tax to reach 5% once you have income over $400,000. So some increases involved there. When we talk about the Trump campaign, no kind of changes proposed when it comes to this capital gain tax. So probably looking at the status quo, taking what was the changes that were made in the Tax Cuts and Jobs Act and just continuing that moving forward. Now let's talk about some employee items. And so if you're a business owner, you have employees and you're running payroll, these are some things that might come into play. The Harris campaign is looking to exempt tip income. So no taxes on tips. Same thing with the Trump campaign. They have both agreed on something, and this is one topic that they have agreed on. The Harris campaign has talked about increasing Medicare tax to reach 5% on income over $400,000. So this would be a Medicare tax increase, which is a payroll tax as well. As far as the Trump campaign, they've talked about also exempting overtime pay from taxation. So overtime would not be subject to taxation. That's an item that the Trump campaign talked about. Now let's talk about some personal items. This doesn't directly affect your LLC, but as an LLC, it's a flow through any of that income's coming to you. So let's talk about some of those items on the personal side. And first, we're going to talk about the Harris campaign. She has talked about expanding the child tax credit to $6,000 for new children. So this would be the first year of life. $3,600 for children between the ages of 2 and 5, and $3,000 for older children. The Harris campaign has also talked about expanding the earned income tax credit and various other premium tax credits. So the premium tax credits are where you get health insurance via the marketplace, and you get discounts on that based on your income and different activities that you have going on. And so the Harris campaign has talked about expanding the earned income tax credit as well as that premium tax credit to help make health insurance affordable, especially for those purchasing through the marketplace, which we do see a lot of business owners or their employees utilizing. And then the Harris campaign has also talked about expanding housing tax credits. This would be like low-income housing, new home buyer tax credits, starter home tax credits, and different types of credits around that. Now let's talk about the Trump campaign. They have talked about, making the Tax Cuts and Jobs Act, the individual income tax rates that came from that, making those permanent. So those are due to expire at the end of 2025. The Trump campaign has talked about making those permanent. Same thing with estate tax, making that higher estate tax rate permanent down the road. They've also looked at reinstating the unlimited itemized deductions for state and local taxes. And you will remember this, especially if you're in California or New York or a high income tax state. But as part of the Tax Cuts and Jobs Act, which went through when Trump was in his first term as president, there was a cap on your itemized deductions for state and local taxes. That cap was $10,000. And so Trump has talked about releasing that cap and having unlimited in that part back to where it was prior to the Tax Cuts and Jobs Act. And Trump has also talked about making Social Security benefits exempt from taxation. And so that would be another kind of personal item for those that are collecting Social Security. Now, the other thing I want to talk about is that there is this, we talked about this Tax Cuts and Jobs Act. And again, this was the major tax bill that Trump put into play when he was in his first term in office. And a good amount of the item, a large portion of the items in that legislation that was passed are set to expire. And for various kind of more technical reasons, that's what happens when you pass tax bills. Sometimes you have to make some of those items in there expire in order to make it pass various different things. And so a good amount of items are set to expire. And some of those items include the highest tax rate used to be 39.6%. That act moved it down to 37%. That act also nearly doubled the standard deduction. And so that means that a lot of people weren't even taking itemized deductions anymore, because the standard deduction was now nearly double what it was before. That act removed personal exemptions as a deduction. There was that state and local income tax cap that we talked about of $10,000. That's part of the Tax Cuts and Jobs Act. Qualified business income, QBI income. This is something that if you're an LLC owner, you get a 20% deduction, and there's limitations and various different aspects to it. But in general, you get a 20% deduction on your income. So if your business profits $100,000, you get to reduce that by $20,000, and then you're going to pay tax on $80,000. So that's the QBI deduction. That is part of the Tax Cuts and Jobs Act, and that is set to expire at the end of 2025. Another item that was part of this was almost the estate tax exemption. So if you pass away and your heirs receive your estate, is that taxable or not is going to depend on the value of that estate, and that value of where it's taxable or not was nearly doubled as part of the Tax Cuts and Jobs Act. That's looking to expire. And then bonus depreciation. This was a beautiful thing for business owners. Bonus depreciation, which through the TCJA, Tax Cuts and Jobs Act, was set at 100%. So you buy an asset in your business, you can take bonus depreciation and take 100% deduction for that in year one. Now, year by year, that has slowly been going down from 80% to 60% to 40%. Eventually, that will expire as well. So those are all things that are being expiring from a previous tax bill that was passed. Now, there's hard to say what would be extended. There's a lot of talk through the legislation about extending that, and this is bipartisan support. Some ways, both ways, some items not. But generally, there is bipartisan support to extend some of that. It just depends on what is being extended or not. And I will say that if in the Harris campaign, a lot of those items are probably less likely to be extended if Harris gets elected, whereas the Trump campaign probably more likely to be extended, because that is really kind of the core of Trump when it comes to the tax side is a bill that he already passed in the past. And so if Trump gets elected, that will likely be extended with just some minor tweaks with some things he wants to change on it, where if Harris, likely a lot of the items may not be extended, and then she's going to add in a lot of the things we discussed as part of her plan in that piece. So that's the Tax Cuts and Jobs that will impact a lot of business owners and individuals at all different levels in good ways and bad ways. And so that's something to keep an eye on. The one thing I want to talk about with everything that's going on with all these different items is that no matter what happens, whether Trump gets elected, whether Harris gets elected, whether these actually pass and what they're saying they're going to do actually happens or not, whatever happens just means that there's more opportunities for planning. Whenever there is a tax change, increase in rates, lower rates, just a change in how businesses operate, how things are taxed, that leads to more planning opportunities. And so just because there might be a campaign that says there's going to be an increased rates does not necessarily mean that, hey, we're paying those rates, because maybe that creates more tax planning. And so you're in the right place to be here learning about different strategies and how we can lower that. So again, what we talked about are just some of the things that both campaigns have put out there. And you'll notice with these different campaigns that when most parties that are running for office, when they produce their agenda, some of the things that they want to do, some of the things that they're going to do, they're targeting specific voters of theirs. And so you can probably look down that list and understand, okay, who is Harris, for the most part, trying to target in some of the things that she's putting out there? And who is Trump trying to target in some of the things that he is putting out there? And so you'll start to see that trend. Again, these are all concepts, ideas. This does not mean that if they get elected, this is what's going to happen, because guess what? There are more people to the party that determine what actually happens. And so this is just ideas and thoughts that will change drastically as we go down. And we even look at this in the past, we see all these different bills being sent to the Senate and through the House, and they break down. They don't go through. And one president says, I want to do this. And then that bill can't get through the House. So they got to adjust it. They change a few things and then try it again. That will likely happen with all of these items. So to say that either one of these candidates get elected, that this will happen, it would just be a false statement. That's vastly indifferent, but it at least helps you give an idea of kind of what direction things would likely go based on who gets elected and how is that going to impact you. Again, whatever happens in this election, in whichever direction it goes, there's always room for tax planning. This is just going to open up the door. Anytime there's a tax legislation change, it opens up the door for you to be more proactive with tax planning and utilize the incentives that the government has given you, which is exactly these items within the tax code. So now that you know how the election will impact your LLC, you can better prepare for the impacts it might have. However, this is only general advice that applies to everyone. We can't sit down on this video and look at your exact situation. So if you want to be even more prepared, click the first link in the description to get access to our team of tax experts with unlimited access to our team immediately, where you can find out how to not only prepare for the election, but to also potentially save thousands in taxes. We'll see you in the next one.